Watching me today. My name is Peter. Welcome back to Invest with Star. First of all, I wish you Merry Christmas and Happy New Year, wherever you're watching me today, around the world, wherever you are, friends, for everybody. I wish you Merry Christmas and Happy New Year. Out the stocks I will be purchasing, the companies I will be buying next year, 2023, regardless of what's coming, regardless of whether there's a recession or there's a crisis, financial downturn or something like that. I'm not going to let that discourage me from putting my money in the right place. So now let's talk about this company, right? So what's your plan for 2023? This is my plan, right? I've got 10 stocks, 10 good stocks I'm going to be talking about today. If you can wait till the end, I think it's going to benefit you a lot. So let's crack on, right? All right, so let's talk about this company, right? My first company is, okay, before I go into my company, if you see me for the first time, I'm Peter Has. I'm not this funny everywhere anyway, so, well, sometimes we need to spice it up. So I am Peter Has, right? I bring this information once in a week because it's not my major, job. I have my other job. So I come once in a week. I bring out information that probably benefits you today, tomorrow, or in the future, or what has actually happened in the past, right? So, but today I'm going to be talking about 10 stocks, right, that I will be purchasing next year, 2023, because these are the good companies that you might want to have a look at. I'm not saying you should buy these companies, right? Because I'm not actually a financial advisor. I am an investor, right? So I'm not registered to give you advice or something like that. I'm just a random guy you're watching on the internet, right? So I'm not saying you should go now, save money and just put your money in this company. You need to do your due diligence before you purchase any of this company, right? Because I actually do my due diligence before I come up with this company. The dividend stocks, solid stocks. And actually, if you disagree with this company or any of these company, please put your comment down in the comment section. Ask me whether you agree or disagree with these companies and this and that. And if I actually means any word, correct me. Nobody's about to, life is too short. So, comment down in the comment section. Ask me whether you agree or disagree with these companies and this and that. And if I actually means any word, correct me, going in the comment section. Now let's talk about these companies, right? Because I don't want to waste time. I don't want to take too many time, because I know you guys are still having, good times, this holiday time. So I don't want to be wasting your time, right? Watching TV or watching stuff from your phone. So let's just go to it. So now the first company is P&G, Procter Gamble. Why? This company, right, is one of the, it's a very big company, and it's got like outlet in over 180 countries in the world. Wow, that's a big company though. So this company's market cap is over 361 billion US dollars. I have been looking at this company now, like, well, and these are the companies that major institutions looking to invest in and probably do their deal, because I believe these are the companies that will stand the test of time during crisis or global economic downturn, right? So that's why you should be looking at this company and leave your tech stocks for 2023. The one you've got in your portfolio is enough for now, right? Get into places where you can invest, get dividends, and also that will bring profit to your portfolio, right? So Procter Gamble specializes in household usage, consumables, healthcare products, toothpaste, facial cream for ladies, for women. Women loves to look good and all that. Regardless of what's going on in their life, they still want to put that cream on their face and all that stuff. So it's not a makeup company, but a cream, healthcare product, like I'm saying, to clean, face cleaner and all this stuff. So toothpaste, so many things. I don't want to be, emphasize on this company because, I'm going to be talking about 10 companies today, right? So you may have to do your due diligence in this company, but I'm just going to summarize it and brief it for you, and I'll tell you the most important thing you need to know about these companies, right? So now this company is, I'll be looking up and down because I actually, drafted this company down, I can't be saying it offhand, so I need to be looking up and down. So if you see my neck going up and down, it's looking at my jotters, my diary, and everything I pull down for you to talk about today, right? So this company is specialized in consumable personal care, cleaning products, healthcare and home goods. Tell me, whatever is going on in the world, people still gonna clean their house, they're still gonna wipe their face, wipe their bum, wipe their table, clean all the stuff around themselves and all that stuff. So regardless of what they hand, whether they're walking or not, they're still gonna clean their toilet, clean themselves and all that stuff. These are the companies that we know, regardless of what's going on, they're gonna be around and they are gonna perform better even during crisis. Procter Gamble, so it's a dividend stock as well. Like I said earlier on, I'll be talking about the stocks, and most of them are dividend stocks. So as these companies sustaining your portfolio, you're still getting paid by them, some annually, some quarterly, and some monthly. So you need to be smart about this, right? So the annual dividend of these companies is 2.3%, and also the P ratio, the market cap is 361 billion. You can check the P ratio by yourself. So I didn't put it on this one, but I have P ratio in some other companies I'm going to be talking about today, right? So Procter Gamble is one of my number one. I'm going to be picking up 2023 to sustain my portfolio. So let's go to the second one. Second one is J&J, Johnson & Johnson. You know, everybody, you know what goes on. I don't have to emphasize on this company. This company has been around for years, and they are into pharmaceuticals, multinational pharmaceutical corporation. They are based in New Jersey, United States of America. So they produce drug, baby care products, health-related product as well. J&J, they during COVID crisis, they actually, came up with COVID vaccine and all that stuff, regardless of what happened around that time. I don't want to be going there. It's another case entirely. So this company has, they gives $4.2 per share per year, right? So that's the annual, I think, annually. So you're going to be having $4.32 on one share of J&J. You have for a year. So if you have 20, then you can multiply 4.32 by 20, and that's it for you. So, this company, it's a very solid company, and market cap is 464 billion. I think it's probably the biggest, if not the biggest, maybe the second biggest, healthcare company and all that stuff. So 464 billion US dollar in market cap. So these are the companies I'm going to be looking at. And if you disagree with these companies, please, like I said, put it in your comment section. Tell me, Peter ads, you're wrong. This company is not these. I won't be buying these. Just tell me. We'll have a conversation about that. That's how we learn, right? So let me go to the second one. It's Coca-Cola. Tell me that you don't have a Coca-Cola or a can of Coca-Cola in your house at this period. If it's no, well, kudos to you. You beat me on that one. But if it's yes, why not having this stock in your portfolio? Tell me why. Give me a good reason why you shouldn't be buying this company. And if Warren Buffett can have billions of dollars in this company, what's stopping you? So Coca-Cola has 275 billion US dollar in market cap, dividend stock of 2.76%. And also they're all over the world. This company has been around over 100 years and all that. So, wherever you go around the world, if you show a can of Coca-Cola, everybody know what that is, right? So it makes people smile. And at this festive period, people will be consuming billions of cans of Coca-Cola. So tell me, a company like that, how do you expect it to perform even in crisis? Regardless of what's happening to people are still going to open a can of Coke. I don't want to be drinking it on this video because, they are not sponsoring me. So I can't be opening Coca-Cola on this video. I'm not sponsored, so they're not sponsoring me. So, but tell me, it's Christmas, New Year, and all this festive period. People see a can everywhere. People drinking all that stuff. So this company is a very good company if you're looking into dividend stock and a company that's going to give you a solid profit in your portfolio. That's number 3. Number 4, SBUX, that's Starbucks. Yeah, not everybody, it's not, people have their preference, Starbucks, cafe, all this cafe, all that stuff. But most people like that. Yeah, Starbucks is always, their hot chocolate is always on point and all that stuff. Their coffee is like that. So this company is, all around the world. People know Starbucks like the back of their hand, and people patronize it. Regardless of what happened, people are still going to go to their best cafe. Starbucks is, very big in Asia, especially China. So their major market is in China and all that stuff. So, and we know China is opening up gradually, although they still have the COVID crisis and all that stuff. Well, it's bound to happen if they've been locked down for over 2 years now. So once they let people out, people go crazy, party everywhere, and people start, that's not what we're going to be talking about. But I'm talking about, as China open up, expect Starbucks, to perform better than, expected. Next year when they're reporting, I believe they're going to be reporting a good profit margin and all that stuff. So this company is in my portfolio already, and I'll be piling in money as well come 2023, right? So, and it's 2.08%, they pay 2.08% dividends, and P ratio is 34, which is actually good. So next one, PepsiCo, right? Okay, that's the second brother of Coca-Cola. Though they don't like each other, two companies don't like each other because they're competitors, right? So PepsiCo also, is a market. They have market cap of 251 billion US dollars, and dividend is 2.48%. So P ratio is 26. Wow, that's actually good enough, right? So they're all over the place. Pepsi, that, Pepsi, these. I grew up, around Pepsi. I know what I'm talking about. So they support Sport Academy, all this. Pepsi and Coca-Cola aren't going anywhere. They produce consumables and all that stuff. So we know, they are gonna be around when we are no longer around. So it's a very good company you might want to look at, right? So let's go on to the next one, which is Visa. Now, you have a bank card, credit card, debit card in your wallet. So I can bet you that out of 3 or 4, card you have in your wallet, you probably have 2 Visa card. Right. So this means, So I'm just talking about everything we see on a daily basis, everything we use on a daily basis, everything that comes around us that you can actually see. You don't need to think around. You don't need to crack your head or, rattle around before you see all these things around you. And why not? These are the places, smart investors, institutions are piling their money while we are running after Tesla. We're running after some company and all that stuff. They actually staying with steady, profitable company that pays dividend. So why not? So now Visa has a market cap of 424 billion US dollars, dividend of 0.56. I know it's a small dividend, but whereas it's better than not, it's still better than nothing. So P ratio is 30. It's a leading global payment. I don't have to tell you what they do. You know what Visa does. So just to cut a bit of time from my video, I don't want to be talking about that. Just a summary of all that stuff. So let's go to the next one. We might be like a new one to some investors. I know most big investors don't know this one. So the ticker symbol of this one is MDLZ International. So ticker symbol of MDLZ, right? MDLZ International. So the market cap of this company is 9.16 billion US dollars, dividend stock of 1.62%. So this company produces and markets snacks, food products, beverage on the brand of Oreo. Your kids, when you take them to the shop or shopping mall, they see this Oreo with the white cream in the middle. I want Oreo. So this is the company that actually produces. This is the company that Oreo comes under, right? So they're branded under MDLZ, right? So this is the company that they have Oreo under their brand, Tom Brown, Belvita, and all this consumable stuff that we buy every day. We go to the shop and all that stuff. So this company operates in more than 80 countries around the world, and the P ratio is 29. So you see, all these companies I'm talking about, none of them has a P ratio over 35 today. So that's still better than companies with P ratio. I don't want to be mentioning some company that you actually know you invest in, which is more than 120 or over 100 P ratio. But these are the company that it's going to be around, produces everything you use on a daily basis. Why not? So the ticker symbol is MDLZ, MDLZ International. Look at that company. Check it out yourself. So number 8 now, talk about Costco. Right. Yeah, let's talk about the marketplace. So everybody in US that you guys go to buy your groceries, your household, your consumables, everything and all that stuff. This is a solid company around. And the P ratio is 34, right? So market cap is 204 billion US dollars, which is good company and all that stuff. Regardless of what goes on, people look at that store and buy stuff. Regardless of what's going on, people are still going to shop at Costco. So if you're paying to buy stuff in Costco, why not let pay you dividends? Why not? Trade by barter. I buy stuff in your shop, I buy my stuff, I invest in your company, and you pay me back my dividend. So either ways, you're still making money. So dividend of 0.75%. I know it's a little bit on the downside, but notwithstanding, it's still better than none. So this, is a wholesale corporation. You know what I'm talking about. I don't want to beat about it, but just that, racking my head over that. So check that research into Costco, see how they've performed this year and all that stuff. So I'll be moving on from there as well. So let's talk about the last two. On number 8 now, let's talk about McDonald's. We call it McD's in UK, right? So kids love this, and so many grown-ups, you see them park their cars everywhere, drive through. Some people every weekend they go there to eat. Well, I'm not patronizing McDonald's. I'm just saying this is a good company. Now, people just walk in and it makes people happy, order your stuff and people like, yeah, I want my big dash. I don't want to be mentioning the name of food on the menu. This company has a market cap of 195 billion US dollar with dividend of 2.12. That's on the high side dividend, right? 2.12% dividend. All right. So P ratio is 33. The big Warren Buffett has piled of money in this company, and he's been investing in this company for over 50 years. So why not invest in this company and get paid? Get paid quarterly, get paid annually, and all that. So these are the companies I'm gonna be looking at 2023. As people are saying, well, my portfolio is down, this and down, still getting paid and reinvesting that money, that dividend, into stocks that you want to buy, or reinvesting it in this company. So get paid dividend, reinvest it back into the stocks, and from there, the law of compound interest is always right? So why do you want to leave money on the table? You don't leave money on the table, right? So that's it. So the last one is Chevron, CVX. So this company, actually, we know Chevron. You buy your fuel and all that stuff. Chevron. It's been around for years. So market cap of 343 billion US dollar. It's an integrated energy and chemical petroleum company that produces, transports, refined oil and gas and all that. So Chevron actually pays a dividend stock, and dividend is on the high side. So I'm going to be looking at this company, and also regardless of what's happening around the world, geopolitical issue, Russia, Ukraine, oil sector, is still going to be a good place to put in your money regardless of what's going on, because anything can pop up again. You don't know what's happening. People have been investing in energy this year. They are in profit. They are in solid profit this year because they're smart enough to understand, well, if this country invade this country, there's going to be scarcity, there's going to be crisis around this sector. Why not put money now and let the gains keep rising and piling in? So people who are invested in this company, they made their bucks in 2022. So, these are the company that pay you well, and also that can actually, pay dividend as well. So I'll be looking at this company as well. And the PE ratio, right? The PE ratio is 10. So I'm going to be looking at this company and I will be buying this company. I don't care what people say, like, oh, energy is this, energy is that. I'm still going to be buying this company and all that stuff. So the P ratio is 10, and also, they provide, refined energy, and one of the biggest producers. So in that sector. And the last one, which is, probably 11th, you can count, is Devon Energy. I invested in that company as well. They pay a good dividend stock. So that's 11th, right? I promised that. Now I'm giving the 11th one, right? So look at DVN as well. They pay good, and it's a good company. So I will be looking at this company. I've done my due diligence on them, and I'll be piling by 2023, regardless of what the market says or what the economy says. All right, guys, that's it for today, right? And I'm very happy to, to share my, my note with you today, my research and all that stuff. So I don't usually do this, I always talk about what's going on in the market, what's happening, what's going to happen and all that stuff. But today I'm actually dishing out 10 or 10 plus companies that's probably going to benefit you come 2023. All right, then I'll see you again next week, and take care of yourself. Bye for now.